Hello, everyone. Welcome to our fourth webinar hosted by the Practice Resource Center, the Council on Continuing Professional Development. This is the right place as we see that people are starting to log in. This is the right place. This is the webinar, A Path to a New Vision, Financial Implications of COVID Beyond the Basics. And we'll just give a few minutes as the virtual doors are opening to have everyone come in and join us, and welcome back. As you are waiting for the session to start, feel free to search the Practice Resource Center once the webinar is done. Don't do it right now during the webinar, but you've got the website there and you have a calendar of all the different activities. It seems like we're sort of covered with webinars all over. And so feel free to check them out. There are links, there are resources, all put out by the Canadian Council of the COS, the Council on Professional Development. This is just a reminder slide of the COS Board of Directors, and many of the Board of Directors are involved actively in a number of initiatives across the provinces, across specialties, in trying to help us navigate this COVID crisis. This is also the different committees that we have at the COS level. So you see we're active in all sorts of areas in ophthalmology. Remember to visit the CJO last week. Dr. Shadawi told us about the different initiatives with the CJO, as well as online things and online versions, and follow us on Twitter as well. So I'd like to welcome you. Good morning, good afternoon, good evening, wherever you are, to this, the fourth of a series of webinars. And the general theme is A Path to a New Vision. And this particular webinar is on financial issues, the financial implications of COVID-19 beyond the basics. And as we get started with this, I'd like to remind you not to use the chat for chatting, first of all. Pay attention. Just kidding. And also to sort of submit your questions. Instead of using the chat, use the Q&A. Dr. Hadi Saheb is going to be monitoring that, and he's going to sort of be prompting us and selecting the good questions and the important ones, or the relevant questions. All of the questions are good. I'd like to ask our chair of the CPD Council, Dr. Colin Mann, to give a brief introduction and also a little bit of an idea of where the CPD is heading in the months and years to come. Colin?
Thank you, Guillermo. As Guillermo has outlined, this webinar series is brought to you by the COS Council on CPD. The CPD program at the COS has a vision and mission statement to learn, lead, and innovate, and to facilitate quality, innovative, lifelong learning opportunities for ophthalmologists to ensure excellence in patient care. And this webinar series we saw as a need for the membership after talking to our members during this time. And our overall objectives are to meet educational needs across the CanMed's roles for ophthalmologists at all stages of their careers. Obviously, during this time, online learning has become even more important, and certainly the COS CPD Council is looking at opportunities to bring that to you, of which this webinar is one. The arms of the CPD program are administered by volunteer physician leads in each of the areas and supported by COS staff, ably led by our Director of CPD, Cheryl Ripley. The arms of the CPD program include the annual meeting with our chair, Mona Harisi Dagher. She has an amazing program planned for the meeting this year, which has been pivoted to be a virtual meeting, and I think is exciting. It brings to you a wide-ranging group of topics with international speakers, and I think we look forward to that. The second arm is the Canadian Journal of Ophthalmology, which you're all familiar with, our editor-in-chief, Farron Chowdhury, and he has brought forward a lot of innovative initiatives over the last while. You'll see resident perspectives, you'll see visual abstracts, and maintaining the continued high quality publication that it is with timely supplements. And there's a supplement coming on physician health and wellness. The Practice Resource Center, which Guillermo already alluded to, brings together all of the CPD resources, both within the COS and outside. And our physician lead, Christine Law, looks after that along with her committee, and I would commend that to you. The Maintenance of Certification Committee looks after the interface with the Royal College and making sure that we're an accredited program and adhering to those standards, and that's something that I chair. And on the Planning Committee, also Dr. Hadi Sahab has agreed to join us, and he's accepted a nomination to have his name put forward to take over chair of the CPD Council and the Maintenance of Certification Committee, and that vote would take place at our annual business meeting, and that would allow me to move into my position as president from president-elect. And in addition to that, on our planning committee, Guillermo has filled in so much more of a role than just moderator, and has put a lot of time and effort into preparation. For that, we thank you, Guillermo. So finally, another word in support of the PRC. If you're looking for the webinars to review them or look at them later, they're going to be appearing on the PRC. The PRC brings together resources around COVID, but it's so much more than that. You can find learning opportunities across all different types of specialties, subspecialties, and different learning opportunities. And as Guillermo put up earlier, the calendar will show you all of the things that are going on and keep you on track. So without any further ado, I want to say thank you to the Planning Committee and for all those that have been working hard to bring this to you. And thank you again to you, Guillermo. Turn it back to you.
Thank you very much, Colin, and thanks for all the committee for all your work, the work that you do. I'd like to remind all the attendees that there's CPD Section 1 credits from this event, and I'd like to thank our sponsors with an unrestricted grant from Bayer as well. So today's topic can be a confusing one, right? Over the years as ophthalmologists, we've learned all these abbreviations, PRP, PKP, VEGF, AION, and now all of a sudden we're thrown into this kind of abbreviations that we need to become familiar with: CERB, SUS, CIBA, BCAP, CCB, and SECRA. And so all of these are new ones. In fact, yesterday we were chatting with our speakers, and there were some new programs coming out. So as you can see, this is a rapidly evolving field. But I would like to refer you to this quote, which I really like. If you want to build a ship, don't drum up the people together to collect wood. That's sort of getting lost in all of that, that terminology. Don't assign them tasks and works, but rather teach them to long for the endless immensity of the sea. And that's really what we would like to do here. It's a path to a new vision. We've talked about understanding the virus. We've talked about being strong medical legally. We talked about reimagining our practices with teleophthalmology. And now we're going to talk about finances. How do we have resilience to move to that optimization of the new normal, which, by the way, will be the last webinar in our series. So this one will be talking about finances. And we've been really hit in ophthalmology. If you see here, a decline of 80% in consultations and surgeries. We're the worst hit specialty in medicine. And we're trying to balance the duty of care with financial survival and the COVID-19, the risks and the seriousness of the pandemic. So for that, to guide us through, to help us navigate through all of this, we've invited Jennie Ho, Senior Manager Wealth Management Taxation with Scotia Wealth Management, to talk about federal support programs. And we've also asked and invited Julie Petrera, National Lead Financial Planner Content and Signature Strategy for MD Financial Management. And so I'd like to welcome you both, Jennie and Julie, for your participation. I'd also like to thank our panelists. We wanted to have private, public, academic, non-academic, big centers, smaller centers. And so we have a panelist of 4 of our colleagues who are all excellent in their areas, but now have also had to jump into learning about these financial challenges and opportunities. So I think it's going to be a very exciting webinar. And Colleen, could we sort of set the stage for our speakers just so they understand a little bit more about our audience with the poll, please? And there's 2 questions here. So how would you describe the financial effect for you of the COVID pandemic? Minimal effect on professional financial situation, significant effect on my professional financial situation, but substantially mitigated by federal or provincial programs? Are you experiencing a significant effect on the professional financial situation, or a catastrophic effect on professional and personal finances? Okay, we'll look at those results. So significant effect on the, yeah, and that's why we thought we should do this one. We'll do the next poll, significant effect. That's the reality. And we'll have the second poll. To what extent do you expect federal or provincial government programs will benefit you? No benefit from any programs, some small benefit, but not really making a big impact, substantial benefit such that I'm less worried, or will emerge as well as I would have been normally. Go ahead with your answers, please. Some small benefit, but not really making a big impact. Okay, so that's very interesting. And I hope this sort of sets the stage, starting with you, Jennie. And thank you once again for joining us with your expertise to talk about federal support programs.
Thank you. Hi, everyone. Hope everyone is doing well and staying safe. Thank you for having me here to provide some updates on the government support programs for individuals and businesses. And I'll take this opportunity to dive a little bit deeper on certain programs. Hopefully, it will provide some more clarification and more benefits for those who experience some big impacts out there. And Dr. Rocha, thank you so much. I appreciate so much that you actually list out all the acronyms out there. I have some, you know, I understand the term LASIK and PRK only because I have got my eyes done a couple years ago and I'm happily ever after. And completely and truly appreciate all the work that you guys do. So without further ado, I just want to kick started with the federal support programs respecting the business measures. So first, there will be 2 wage subsidies that are available, and the first of that is Canada Emergency Wage Subsidy, or what we call CEWS. It applies to all employers of all sizes. That includes incorporated physicians. So if you're incorporated and also an employee of your corporations, you may be entitled to individuals or corporate measures that could help you. So I would ask you that if you actually incorporated, wear your business hat on as a business owner when we're talking about the business support programs, and switch off to your individual hats when we're talking about individual measures as an employee. So with this program, it provides up to 75% of wage subsidy to eligible employers, up to $847 per week per employee. The only catch for that is if you are also receiving a Canada Emergency Response Benefit, or your employees is receiving that CERB, then as an employer, you will not be able to claim the wage subsidy for that employee for that particular period. And we'll go over the Canada Emergency Response Benefit in a bit when we go over the individual's measures. Eligible employees must be employed in Canada regardless of their tax residency. So as long as they are employed in Canada and have been paid for at least 14 or more consecutive days, they would be qualified. For an employer to be eligible for this subsidy, you must be an individual, a taxable corporation, partnership, nonprofit organization, or registered charity with this eligible employees that we mentioned earlier. And you also need to meet a reduction in revenue test, which is a 15% drop in revenue in March or 30% drop in April and May. You have an option to compare your revenue to the same period in 2019 or the average revenue that you earn in January and February of this year. So once you qualify for the CEWS for one claim period, you will automatically qualify for the next period. So for example, if I have a reduction in revenue for 20% in March, I already qualify for the March subsidy, and I will also automatically qualify for April, but not necessary for May. And during May time, I have to redo my reduction test again just to see whether I meet the 30% or not. So Another test that you need to do is whether you pay eligible remuneration such as salary and wages to your employees. So again, if you're owner-manager that you're incorporated and you only pay yourself dividends and not salaries, the dividends alone will not be considered eligible remuneration for purposes of this subsidy. So essentially, you will need to pay yourself a salary between January 1st to March 15 in order to qualify for this subsidy. So for the next subsidy that I'll be talking about would be the 10% temporary wage subsidy. So similar to SUS, this subsidy requires employers to be individuals, nonprofit organization, registered charity, or partnership. With exception of corporation, it has to be a Canadian-controlled private corporation that is eligible for small business deduction. So if you incorporated a medical professional corporation, I would imagine most of your corporations would be eligible for this small business deduction and for the subsidy. But that being said, you should confirm that with your tax professionals. If they qualify, the employer will be entitled to receive a 10% remuneration paid between March 18 and June 19, up to $1,375 per employee, and a maximum employer subsidy of $25,000. So you do not receive a check or cash from the government for this subsidy, but you will essentially reduce your withholding taxes that you need to remit to the CRA through your payroll. So for the next page that I have is a flow chart, and the question lies is, do you qualify for SUS or the temporary wage subsidy? The test for these subsidies can be complicated, depends on how you structure, how you calculate your revenue, what are the sizes of your corporations, etc. And we will definitely differ and strongly recommend that you speak with your tax professionals to assist you through this application process, particular to your situation. So the flowchart here that I've compiled is just to simplify the subsidies for your understanding, and we'll leave it with you to refer to it later on. There may be situations where an employer qualifies for both subsidies, and just to be aware that if you're claiming for SUS, it will reduce any amount based on how much you receive under the temporary wage subsidies. So just to dive a little bit deeper to SUS, there are 3 top frequently asked questions that I've received recently, and I just would like to share with all of you. Question 1, what if you retroactively pay the staff that you rehired? As an eligible employer who rehires eligible employees, they may qualify for SUS. And employers who apply for the subsidy are expected to make their best effort to top up employee salaries to bring them back up to the pre-crisis level. And employers are required to attest that they are making the best effort to do so. On the employee side, if they are already receiving the CERP benefits for the claim period, the employee is required to repay the CERP payment. So meaning that you cannot double dip for company to get the SUS and employee to get the CERP payment because they're already getting paid from their employer. So it is the employer's responsibility for the qualification for SUS, while the onus is on the employee for CERP. So the next question I have here is, what if I have a group of eligible employers? Do we test a drop in revenue together or separately? So for a group of eligible employers, usually they prepare their financial statements together, consolidate. They have the options to determine whether they can qualify the revenue on a consolidated basis or separately, as long as all the members are using the same method together. So for example, we have Corporation A that owns all shares of Corporation B, and they're both eligible employers. If we look at the little chart at the bottom of the slide, for Corporation A, the revenue from this year compared to last year's in March has no change, so it's lucky for them, and that's a 0%, meaning that they would not be qualified for the SUS program subsidy. For Corporation B, there's a drop in $200,000 of revenue in March this year as compared to last year's, which is a 20% drop in revenue, which qualified them for the SUS subsidy for March. So just by looking at them separately, we can see that Corporation B were qualified, but not Corporation A. And if we look at it on a consolidated basis, the drop collectively, it's only 10%, which would disqualify both corporations at the same time. So for this instance, separating the revenue calculations is actually more beneficial. The next question I have for you is, what about affiliated group of eligible employers? How do we determine the qualifying revenue? So first off, what is affiliated group? Now I'm dropping accounting terms to you. Affiliated group, just an easy example would be individuals and their spouses or common law partners. Or if there are two or more corporations, if those corporations are controlled by a person and those persons are affiliated with each other, then those groups of corporations would be affiliated. So I have a diagram and a bill on the bottom of the page to help you visualize it a little bit. So on the bottom left-hand corner, we have spouse A that owns Corp A and spouse B that owns Corp B. So because A and B, we know they're spouses, so they are affiliated with each other. And they also have control over their respective corporations, so they're affiliated with their own corporation. So long story short, Corporation A and Corporation B are also affiliated, and they're affiliated group because everyone else is affiliated with each other. And the second diagram I have on the right-hand side is when spouse A actually controls both Corporation A and B. Those two corporations are affiliated with each other because they're controlled by the same person. So A and B are affiliated groups. So I know there are a lot of physicians out there that they may hold more than one corporation. So if they have affiliated group of corporations, they may want to pay attention to how they can determine the qualifying revenue for the purpose of getting the subsidy. So an example here where I have Mr. A that owns all shares of Corporation A, and the spouse, Mrs. A, owns all shares of Corporation B, which is similar to the structure of the diagram that I showed in the previous slide. What they can do here is they can have a joint election together for both corporations to determine the qualifying revenue on a consolidated basis. And in this instance here, if you look at them separately, only Corporation B with the 50% revenue drop would get the subsidy. But if you look at them collectively on a consolidated basis, then both corporations would qualify. So it's more beneficial in this case to file that joint election. So that is it for the wage subsidy programs. Now moving on to other federal business measures. For those who may not qualify for the subsidies or who may still require more liquidity to the business. So one of the programs here is the Canada Emergency Business Account, CEBA. It is an interest-free loans of up to $40,000 to small businesses to help with operating costs. 25% or up to $10,000 of the loan could be forgiven if the balance is repaid on or before December 31st, 2022. The next program we have from the government is the Business Credit Availability Program, BCAP. It includes a loan guarantees and a co-lending program for small and medium-sized enterprises on operating cash flow. And the cash flow term loans can go up to $6.25 million. So for those that are interested and have a business, should work with your current financial institutions to gather more details and qualification. There's also a Canada Emergency Commercial Rent Assistance. This provides loans or forgivable loans to commercial property owners who will reduce the rent up to 75% to the small businesses that are impacted by COVID-19 for the months of April to June. So moving on to individual measures.
Jenny, there's a couple of questions that are actually, I was wondering if we could, because I want to give time also to Julie to move on. There's a lot of questions regarding the SUS I wanted to address here while we have you here and while we're on this topic. So there seem to be questions on how to apply for the SUS. If you are not incorporated, can you apply for SUS or for your staff, or should you be applying for CERB, for example? So there's that confusion, I think, in terms of if I'm incorporated versus not incorporated, am I better off with the emergency wage subsidy, or is it better for me to claim the CERB?
So so again, when we're talking about the business measures, we are putting the business owner's hat on. So it's really for people that are incorporated. Even like the minimum they will need is a business number and a payroll account with the CRA. So that's one of the eligibility qualifications. So if you don't have a business number or a payroll account,
Yes.
You do not qualify for this, and you will have to look into CERB. And with respect to CERB, you have to look at what type of income you received. And there are also other criteria that you have to qualify, which I will go over it in my other slide in the individual measures.
Okay, individual measures. There we are. Thank you.
Yeah, so you're welcome. So with this individual measures, CERB, which is a Canada Emergency Response Benefit, it really is to provide temporary income support for those that stop working because of COVID-19. And the requirement for this CERB is that you have to be at least 15, resident of Canada, eligible for EI benefits, who also had at least $5,000 of income in 2019. So if you're putting in a hat that you are a business owner, that you incorporated, and you only paid yourself dividends, in here, the dividends actually will qualify for this income test. So if you give yourself only $5,000 of dividend last year, you may still qualify for CERB. But just to clarify that dividends may not, and probably will not qualify you as a eligible remuneration for the SUS purposes. So in that case, you may actually have no choice but to apply for CERB and not SUS.
Okay.
Okay. And there's other added benefits to this CERB as well. So for those that, I'm not too sure how many people here may still be going to school with post-secondary or further on with their career. But for those who earn less than $1,000 and still are students, there's a Canada Emergency Student Benefits as well. So again, if you're owner manager, you can actually decide whether or not to apply for the wage subsidies for the company or CERB as an individual, pending on your eligibility.
Okay.
Okay. So there are other supports for Canadians as well. I just want to highlight the support for seniors that are just brand new, like from a couple of days ago, that was announced by our Prime Minister. That's for seniors that are eligible for OH security pension. They will receive a one-time tax-free payment of $300 and also $200 of additional payment if they qualify for guaranteed income supplement.
Okay.
So last but not least, I would like to go over some provincial support, and thank you, Julie and her team, for compiling a snapshot of both personal and business measures for the provinces and territories. I'm not going to go through all of them today, but I have a couple relevant ones that I would like to share with all of you. So for Ontario, Ministry of Health has an advanced payment plan program that provide payments to eligible physicians to address basically their cash flow needs during this pandemic. And it provides monthly interest-free automatic advance payment that can offset against the future OHIP payments to those physicians. And it will basically pay a 70% average of their previous year's payment. Nova Scotia PEI have an income stability for fee-for-service physicians. Basically, it's a fixed or base financial compensation package. For Newfoundland, there's a supplementary pay for the fee-for-service physicians to top up their income up to 80% based on the previous 26 pay period. And Saskatchewan have a provincial agreement that a specialist can earn up to $10,000 per week, but the province may redeploy you for any pandemic needs. So I just want to highlight that some provinces may also provide wage subsidies, but they usually come with a maximum combined federal and provincial amount, which what it means is it essentially reduces the provincial subsidy you can get if you're already getting a federal subsidy. So in here, we cannot tell you which program is the best for you or which one you should apply to. It really depends on your specific situation, arrangement. So we definitely highly encourage you to speak with your tax professionals or financial advisors for more details. So with that being said, that's the end of my slide, and I will pass it on back to Dr. Rocha.
Okay, thank you. Thank you very much, Jenny. Before we go into financial planning considerations, thank you very much for all the information. I'll just leave some of the slides there where we ask you something. I grew up in Mexico, and the Mexico government doesn't really give you much. So the question that pops in my mind when I see all of these benefits is, where is all this money coming from? Can you answer that? Can anybody answer that?
Well, I don't know exactly where they source all the income, but they generally will have research funds in the government. Mm-hmm. So of all the tax dollar money that they receive from us, they don't just spend it out of nowhere, hopefully. Mm-hmm. And my understanding is that they would do some research. So every year they have a federal budget. They will release what they're planning to spend on which program or how much tax they're going to increase or decrease. Okay. So they are building up this type of research to hopefully to help all individuals, if not most Canadians. Yes. And based on what I read on the news, and don't quote me on that, I'm just reading the news, that there may be more debts that are creating for the country. Okay. Okay. Well, thank you so much. Thank you very, very much, Jenny. And we'll keep you on still for the panelists. And with this, I'd like to move on to introduce Julie Petrera. As I mentioned, National Lead Financial Planner Content and Signature Strategy for MD Financial Management. Julie, thank you so much for joining us for this webinar.
Thank you. Thank you for having me. Okay, so I'm going to take you through some financial planning considerations. Okay, so quick reminder of what financial planning is, and there's an image there on the screen. Simply put, it's the process of determining your goals and making a plan to achieve those goals while attempting to mitigate risk. A more detailed description is available if you read all the little pieces of the wheel on the screen. So we start with where you are today. We determine what we need to do to get you where you want to be. The planner's job is to present you with the pros and cons of different ways to do this and then recommend what's best. Some of the steps can be put on autopilot when the plan is implemented, but it needs to be monitored on a regular basis to ensure that it still makes sense. Step 6 in the planning process, which is in navy or in light blue, is dedicated to ensuring that the plan is monitored. So we usually recommend looking at your plan annually or when there's a material change to your financial circumstances, like a global pandemic. So during the process, we address 6 planning topics, and they all work together, meaning that when we make changes to one, another is usually impacted, which is why planning is so important. As an ophthalmologist, there might be some opportunities available to you if you plan for them. I'll give you some considerations on what those opportunities may be and some of the pros and cons to consider. I'll give you some tips on each topic, but here's a quick overview of what they are. So financial management includes cash flow planning, accessing emergency funds and debt repayment. Tax planning attempts to legally reduce taxes by understanding and applying different strategies like tax loss selling and making remuneration adjustments. Investment planning includes reevaluating risk tolerance and adjusting your asset allocation to rebalance after market swings. Retirement income planning includes determining when, where, and how you want to retire and then putting a plan in place to fund that in the most tax efficient manner. Insurance planning includes establishing policies when you don't need them and accessing them when you do. And estate planning includes arranging for a smooth transfer of assets on death. So let's start with debt. It's no secret that physicians incur debt during the training years and sometimes more debt when they establish independent practice. From a planning perspective, there's a lot you can do with debt, especially in a period like this where interest rates are extremely low. On top of that, physicians can usually borrow for rates below prime, both personally and in their corporation. This could therefore be a good time to renegotiate loans that have higher interest rates than current interest rates. Jenny also mentioned some of the special borrowing programs that are available right now, including CEBA and BCAP. You could also possibly want to take on more debt at this point. So if you're considering making practice investments in the near future, consider the low interest rate environment, but also consider your ability to repay those debts, given the uncertain return to practice guidelines and the possibility of a second wave of COVID closures. For those that are focused on repaying debt, follow this rule. Pay high interest rate debts first, then lower rate debts, and then make payments to any creditors that aren't charging interest at all. So pay credit cards first, then loans or line of credit. Due to COVID, CRA and many municipalities are allowing interest-free late payments on income and property taxes. Take them up on that. It's a very rare offer. If you have cash available in the short term that you don't want to apply to loans because you might need it, you can apply it to a line of credit just to park it there to save interest and then reborrow when you need it. And just a note on any mortgage payment deferrals, I know there's a lot of advertising on those. Those are sort of a last resort as there is interest and also fees associated with doing that. If you need access to emergency funds to cover short-term costs, there's an ideal order in which to access cash as well. And there's some tax considerations to consider. If you have cash available in a bank account or a non-registered account, use that. Next, consider borrowing. Again, the low interest rates, the ease of accessing capital could be better than using invested funds for cash payments. Accessing invested funds could have tax consequences. Funds from TFSAs have no tax consequences. Funds from non-registered personal accounts might be subject to capital gains, and funds from RSPs and RIFs are subject to income tax on withdrawal. When you withdraw from a TFSA, you can recontribute the amount in the next calendar year. So if you take it out this year, you can put it back in 2021. But when you withdraw from an RSP, you cannot recontribute the money. The contribution room is permanently lost. Also, keep corporate and personal borrowing separate for tax reasons, meaning have the corp borrow to meet corporate expenses and borrow personally for personal expenses. If you have corporate-owned insurance policies, these may also provide access to cash flow. I'll talk more about that in a minute. And if you have already borrowed and are making accelerated payments and cash flow is tight, consider relaxing those payments to preserve cash flow. Having an emergency fund is part of having a financial plan. So use your emergency fund. And if you use your emergency fund, you'll want to make a plan to repay it when you can. On to tax. So again, selling investments has tax consequences. So does your corp borrowing from your personal self and vice versa. It's usually better to borrow from third parties in those entities instead of from yourself or your corp. Also, how much you pay yourself has tax consequences and will also impact the eligibility for the subsidies that Jennie described. So keep that in mind if you want to adjust remuneration strategies. Depending on when your corporate year end is, you might be able to determine what your corporate tax will be for this year. Look at that when you can to see if there's anything you can do to plan to reduce it. This could include moving expenses forward or backward where possible, adjusting how much you pay yourself or other shareholders from the corp. Again, how much a corp pays an employee impacts both parties' ability to qualify for the different government measures that Jennie outlined. So take a look at those with your accountant and plan for those to do what makes the most sense. On a personal level, if it makes sense to do so, consider tax deferral plans like RSPs and TFSAs, which can also be strong components of your retirement plan. On to investments. As you're probably aware, the financial markets have corrected. So a few things. First, if you manage your own investments, consider reallocating assets back to your target asset mix. So when markets go up and down, different asset classes go up and down faster than others. That might leave you in a position where you need to make a manual adjustment to get yourself back on track. If you hold managed funds, the managers of these assets have probably done that for you. Note on reallocating assets in non-registered accounts, there could be tax consequences. So you could be triggering taxable capital gains or capital losses, and I'll talk about that in just a minute. This might also be a good time to reevaluate your risk tolerance. So when you set up investment accounts, you try to determine what your risk tolerance should be, and it's a very theoretical exercise until something like this happens. And then you realize what you're willing and able to tolerate when it comes to market volatility. So if March and April did not feel good, they did not feel like you would have expected them to, consider revisiting your investment allocations to align to something that you would be more comfortable with. So use this as a benchmark. Yeah. Tax loss selling. So this involves selling investments that have declined to deliberately trigger capital losses. These losses could offset taxes that were already paid, so you can go back and get tax back, or that will need to be paid on capital gains. Tax loss selling can only be done in non-registered accounts, since registered accounts are not subject to tax on gains. If you're considering doing this in a corporate account, be sure to speak to your advisor or your accountant, because there could be an impact to the capital dividend account. So while tax loss selling is a tool in the tax toolbox, don't attempt to trigger losses without understanding the impact on other types of tax. For anybody nearing retirement, if the impacts of the pandemic have had an impact on how, when, or where you want to retire, rerun the numbers. Plans change, so change the inputs and understand the impacts. Planning is a process after all, and adjustments are part of the process. So be sure to make these adjustments as your plans change. Retirement goals are very personal, and there are lots of strategies that can help you meet these goals as long as you review them in advance. So I encourage you to make adjustments if any of your retirement plans have changed. Insurance. So as mentioned, physicians may be looking for accessible cash in the corp right now to meet practice expenditures where corporate billings are down. Consider your insurance policies if you have them. Some corporate-owned policies allow you to borrow against the cash value tax-free. So if you have these, look into them. If you don't have insurance and you're feeling underinsured, look into coverage that is available for you personally or for your business. Risk management is also part of a comprehensive planning process.
On this point, Julie, it's interesting that it's very few, if any, insurance companies that would have covered you for something like this, right? I didn't hear of any.
Yeah, we heard that as well. Initially, there were a lot of our clients were looking into this. We were encouraging people to look into it, and we've had I don't know if anybody has had a positive experience where an insurance company said this was covered, but this sort of seemed to be an outlier.
Yeah.
In something not covered, but where somebody has a corporate-owned policy that has a cash value or a large cash value,
Okay.
you can borrow against that cash value, and that's
okay.
a tax-free way to borrow. So that is a strategy that you can use if you have that.
That's a very good advice. Okay.
And speaking of risk, consider your estate plan. So we have seen a record number of your colleagues get in touch, very, very young colleagues too, that traditionally don't address estate planning in the past couple of months. So we've seen a spike in this. Our advice on wills and estate plans is that everybody needs a will. It should always be current. Your executor should know that they are your executor and where the will is. So usually there's an event that gives people a nudge to do this. It's usually buying a house or having a child. In this case, it's the pandemic. Estate plans provide effective outlines for how you want your personal and corporate assets dealt with at death, and they can be very effective in minimizing taxes, fees, and confusion for your family members. Also, in the wake of COVID, there have been some provinces that have moved forward. I saw Newfoundland did it, I think, yesterday. So estate documents can now be updated with no face-to-face contact or wet signatures at all. So this can, for the first time, be done with e-signatures. So if you're wondering, what do I qualify for exactly? What we have done is we've sort of physicianized all of these. So there's a person and there's a court. So we've sort of tried to physicianize this. I saw a couple of questions really briefly in the chat asking about if you're incorporated or not. If you use this tool, it does take you through whether you're incorporated, self-employed, or an employee. It asks what your province of residency is, and then it just does a summary of all the government benefits available, both provincially and federally.
Oh, excellent. So I'd like to just hone in on this one. So this can be found at md.ca, and it's available just online, right?
Yeah, it's an interactive
Excellent.
Tool. So it'll
Excellent.
ask you questions about reduction in income,
Perfect.
what province you're in. Yeah, and then it gives you a summary.
Excellent. And then the disclaimers. So we can get on to some of the questions as well. Thank you very much, Julie, for that presentation, and as well, Jennie as well. I'll include both of you now in some of the discussions. So I'll start with you, Julie. One of the questions that came was sort of, and you alluded a little bit to that, triggering capital losses, capital gains. Is this a time to be timing the market, so to speak? Like, is this a time where, okay, let's put it's all down, let's go ahead, or should we just sort of stick to the plan, to the strategy in a long-term fashion? What are your thoughts on that?
So it depends. It's much easier to plan for tax than it is to plan for market movements. Mm-hmm. We know how taxes will work. We don't know what the market will do. If you were going to sell assets anyway, look at the tax consequences of doing that now, and if it's advantageous to do that now, then my suggestion would be sure. But if it's in a corporate account, you want to check to see if there's any impact on CDA. If it's not a corporate account, the decision is up to you. It all fits in together. So what is your risk tolerance? If you decide that you want to reduce your risk tolerance because you feel like maybe you thought you wanted more equities and now you're less comfortable with that, you're in a situation where you want to sell equities, and those equities are down from when you bought them, and you could trigger tax losses. We know that we know what the impact will be on on gains or losses. So we know what the impact will be on from a tax perspective, but
Mhm.
what you could potentially miss out by not continuing to hold those equities until they recover, that nobody knows.
Okay. Then a question for Jennie regarding the SECRA. There are a few questions regarding SECRA. Apparently it's not indicated on the CRA website. When can we apply for that? Is it worthwhile? You know, they often say cash is king. Should we be applying for everything we can given the circumstances, and then we'll use what we can use, we won't use what we don't need to use? What are your thoughts on that?
So with the commercial rent assistance, they indicate only it will be applicable in mid-May. So they haven't really given us the whole information of how to apply for it and exactly when. In terms of should you be applying for everything, I would say, you know, try to make sure and go through what you qualify for first, because with SUS, there is attached penalties if you wrongfully apply for it, and the penalties could be as much as 250%. And if there's any fraudulent act or crime, it could be imprisonment as well. So I would say make sure you talk to your accountant, and do not manipulate anything.
Yeah, of course. And the other thing I think is it sort of depends on what your employees, your staff have applied for, right? If somebody is in the SERB program, then they may not qualify for the wage subsidy within your corporation, correct?
Correct, but the employee, if you actually rehire the employee, they may not qualify for SERB anymore because they're receiving income.
Correct.
So I was glancing through the questions earlier when Julie was presenting. I'm sorry, Julie, I was paying attention to you too. Someone was asking that if they rehire individuals, but they have not paid them anything, or at least not 14 days of payments before, can they still apply for SUS? The answer is no. When you rehire any staff, you actually need to retroactively pay them for the previous period. And the process and the steps would be that those employees would then have to repay their SERB and to get the employment income from the employer.
Okay.
And the employer will receive the subsidy.
Well, thank you so much for these two presentations. And I'd like to keep you obviously on the webinar, because now we have our 4 panelists with diverse experiences in terms of practice, in terms of the staff that they manage. And so I've introduced them before, but we have Vivian Yin, clinical assistant professor from UBC, Mona Dagher, she's our chair of the annual meeting and professor at Université of Montréal. Geoff Williams, Associate Professor from Calgary, as well as Cindy Hutnik, Associate Professor from Western University. So I'd like to start with Vivian, please, and welcome to, I was going to say welcome to the show, but no, welcome to the webinar. It's great to have you, and I received your slides.
Yeah, thank you for having me. I'm just going to start off by kind of giving you a framework as to where I'm coming from. So I am a fee-for-service physician working in an academic center in BC, for those of you who don't know me. So because of the academic nature of it, and I'm an orbital oncologist, my revenue generally is very low. So therefore, I have always structured my office with a very low overhead. I've listed here for you all the availability to BC physician from a provincial standpoint, which was listed earlier by Jennie as well. In general, though, I did a quick temperature check in BC just to see how people felt, kind of like what Guillermo did yesterday. And generally, people are split in BC in terms of how they felt. They felt like these subsidies, both federal and provincial, are gives a small amount of help, but really is not going to be the biggest thing that will help us get back to whatever the new normal is going to be, the new catchphrase. But they are there for a reason, and they do at least provide you a few $1,000s if you tally all of these up. So we'll go to the next slide. So I think the more interesting part that I get a lot of question about, because people see that I don't look like I'm freaking out over this, and I seem to have a master plan in mind. So I got a lot of questions from my colleagues in BC about what is it I'm doing that makes me not freak out. And I said, you know, the first thing is you got to start planning early, and you got to set your own bottom line. So I had, since March, the second week of March, had very honest and serious conversation with all of my staff about what our bottom line is, and that, you know, I can't bankrupt my corporation. I also cannot bankrupt myself. So there has to be a point where you say, I can't hold on anymore financially, and that, you know, I have to take more drastic measures. So you have to have these phased financial planning and for your corporation, because you are running a business, even though I think as ophthalmologists, we tend to be relatively flush with revenue generation that we never think about things in such harsh terms. And with any kind of business planning, and I'm not a very business savvy person to tell you the truth, I'm just a very practical person. There's usually two ways to think about it. It's cost and revenue. Those are the only business terms that I understand. So in order to survive financially, you basically either cut costs or you increase revenue. And you kind of have to pick. There's no perfect solution. And it's about your own personal choices. And in terms of cutting costs, a lot of my colleagues have fired their secretaries, or we call them MOAs in BC. And that's because HR is always your highest cost for all businesses, no matter if you're a medical business or not. I chose not to in my practice because for me, the balancing act between practicality and ethics, I decided to go the high route and went with the ethical route. Now, with that being said, I had the luxury to do that because I also do a lot of global health, for those of you who know me. And because of that, my revenue had always been very unstable because of how much global health I do. So even from day one of my practice after fellowship, I had always set up a 6-month reserve of cash flow in the event that anything happens. Either I get in a car accident in Nepal, or I end up being incapacitated for whatever reason, that my office still had to stay open one way or another. So I had my own personal cash reserve that was going to cover my overhead for 6 months. So that gave me the luxury of not firing my staff. Now, with that being said, most of you know that I just came back from New York, which was a huge financial hit for me. So I was a little bit struggling already, and then COVID hit again. So I'm not as flush as I normally would have liked, but I still had enough reserve to maybe supply me for about 2 to 3 months, which is coming up to an end. Which brings me to the next point. I'm going to skip over some of these fine points just because I'm watching the time.
Mm-hmm.
So in terms of increasing revenue, one of the things, first things I did early by not firing my staff is that it allowed me to pivot really quickly. So even though my office on the surface or on the front looked like it's closed down completely since March 10th, and we still are not going to reopen until June 1st, my secretaries have both been working virtually and full-time 8 to 5 every single day. What are they doing during these times? They're actively calling patients, calming patients down, actively putting things into a new Excel sheet, organizing information, getting updated information from patients, because now we need their email address, cell phone number, family contact, favorite pharmacy, because everything had to go virtual. So there was a lot of collection of new data. Also, they were getting all the consent and legal work that was necessary for us to relaunch virtually. So they were figuring out ways to sign consent virtually with DocuSign. There's lots and lots of commercial platform out there that are legally will hold up in court, basically. So they were doing all of these background work 24/7 in order to take my office virtual. So we are already at a stage where we are ready to go 2/3 virtual and 1/3 in person. And a lot of intake and business workflow basically have gone virtual. So they do the bulk of the work in terms of getting my patients ready to see me either virtually or in person. Why does that matter? That matters if you want to ramp up in revenue generation. And also allows you to quickly ramp up or down depending on which way COVID goes. So as much as most of my colleagues said, I'm old, I can't do this, I have 92-year-old patients doing virtual health with me and got their cancer surgery last week. So I think it's a matter of changing your own mindset rather than putting labels on people. And then there's little subsidy you can do. So I do a lot of medical legal work. So I kind of ramped those up and started reviewing legal cases for CMPA as soon as COVID hit, because that becomes a small revenue generation for me to support myself, even if it doesn't cover my overhead. So I'm going to stop there in view of the time. And if anyone has any questions, they're welcome to reach out to me.
Thank you very much, Vivian, and best of luck in your reopening, and very good in terms of your planning. We'll move on to Mona Dagher in Quebec, where it's been quite a significant hit in Montreal. Mona?
Thank you, Guillermo. Thank you for this opportunity to share with you what I have been living through, but also some of my very close friends and colleagues as well. In Quebec, we are the epicenter of Canada. Montreal is mostly hit. The minister has set rules on how we have to return to work. Just like Vivian, I am a fee-for-service physician. I work in an academic center. I do a lot of research. I do not receive a salary, nor from the university, nor for the research I do. And as well, I'm a refractive elective surgeon. And I have to tell you, since early March, there has been no refractive elective surgery at all. And that comprised more or less 50% of my practice. So at this stage, just like the poll said, I did get a significant effect on my professional financial situation, but I am keeping a very optimistic and a positive outlook on all of this. For the longest time, we have said we work so much, we dedicate so much to work, wish we had more time for our families, and I think this is the right time to spend with our families confined at home, so it's perfect. I have to tell you, in Quebec, at this present point, for ophthalmology, it is very difficult. The government has set standards, and since we are to them not as important as oncology and more emergent surgeries, we have to function at a level that is 40 to 50% of usual. 40 to 50% of usual in an academic center when we are 27 ophthalmologists at the CHUM means you get a half a day a week of clinic, and that's a clinic that's reduced to 50% of your normal, and the ORs are closed for anything that is elective unless you have to do penetrating keratoplasty for anything that's very urgent. So I have concentrated a lot of time now on research. There is no revenue at all from that, but it makes things flow, so it's good for that. In terms of what you saw from Jennie's presentation, there is nothing specific that has been offered from the government of Quebec for financial support to physicians. However, the RAMQ has been a bit more lenient. We do not receive employment insurance, but we have been given options. For example, we can be redeployed, and redeployment does not mean we need to work in an intensive care unit or on the floors. Our redeployment can be working to review our clinic list, our surgical list, and also to attend meetings such as this for COVID. So that's one part of our salary nowadays. Another part is teleconsultation, and they're telling us to do up to 30% of our work in teleconsultation because we cannot see the patients in the clinics. But I still, at this point, I've listed what we have in Quebec. You can look at them. I still am hopeful, and some of my greatest friends are ophthalmologists with some of the biggest clinics here in Montreal, and they are also embracing this new reality, looking forward to a change that may decrease our income, but most of us have been in practice for a while, who are my colleagues at this point, so it may not be as hard, but when I look at the younger generation, that's when I feel it's harder for them to live through this at this present time. So for sake of time, I just wanted to say, as physicians, we've been in the history for over 5,000 years, Ayurveda in 3000 BC, we're always going to be present, we're always going to deliver health care to our patients, so always look on the bright side. Thank you, Guillermo, back to you.
Thank you very much, Mona. And I also wish you the best in this recovery. We've been following the news from Montreal and other parts of the country as well with our worries and concerns. So we wish you all the best. I did my training in Montreal. My daughters were born there. I consider Quebec my second home. So I really feel the pain that's happening there. And I wish you the best.
Thank you so much.
Now we'll move on to Calgary. Geoff Williams has as part of the owners of Southern Alberta Eye Center, and you must have some very important information to share, Geoff. And thank you so much for being here.
Thank you, Guillermo. Thank you for the invitation. And yes, it's been a very stressful time, and I'll sort of try and highlight 3 areas of how we've adjusted to things, and then I will reinforce one thing that Vivian said that I thought was really important. So first of all, when the COVID situation started, we had to reduce all of the patient visits. And that meant roughly laying off half of our staff. So to paint the picture, we are on 15,000 square feet. We have 4 retina physicians together, and then there's another 4 associates who do some general work as well. And we had about 55 staff. And it's a bit complex because we are not an individual corporation. The clinic is really a cost share arrangement. So many of the employees were not necessarily directly employed by any one of us. So it made the CERB applications even more confusing for us. And therefore, mostly they were just laid off, and then we're in the process of slowly rehiring as we reopen. Fortunately, because we do retina, there's still some demand for the injection. So we were roughly 50% in the office volume. But then, of course, now we have to adjust to the new reality, which is the waiting room has about 1/3 of the number of chairs in it. Mm-hmm. And that now basically is limiting our flow. So in terms of how you open up and readjust, we are going to need new guidance in terms of maybe everybody wears a mask, maybe there's dividers between the chairs, that kind of thing. So that's the office aspect. The operating aspect is that all of the cataract surgery was shut down for about the last 6 weeks. And of course that meant laying off all of the operating room staff, which we manage. And that entity, the surgical entity, could at least access a business loan, of which 75% of it is repayable and 25% of it is not. Perhaps Jennie or Julie could help confirm on that. But that was helpful in just basically helping to pay the bills. And of course, the revenue was still coming in from surgery work that was done in the previous month. So now it is reopening. Today is our first day. We're rehiring staff and with new procedures in place. And then the third part is actually rent forgiving on parts of the building that for some people their general practice went down by 90%, not 50%. And so we've made adjustments by rent forgiveness for a couple of months that can be repaid probably in the following year, 2021. So those are the big sort of picture financial readjustments you have to do when you are more or less own your own space and run your own office. And then the thing I'd like to come back to about what Vivian said that I think is very important, and fortunately as one of the physicians who've been around for a little while, is that to build up a fund within your professional corporation or however to cover your overhead for at least 3 months. And I'm quite admiring of the 6 months. So just reinforce that point that if you're a younger physician, this may be happening this time. There's going to be something else that may happen in the future, disability or otherwise. And having that cushion there is allows you to sleep at night. Thank you.
Thank you very much, Geoff. I mean, you've got an impressive practice. You and your partners have what I would call a jewel of a practice, and I am very confident it will shine again. It's an incredible practice.
Thank you.
So all the best in this time as well.
Thank you.
And with this, I'd like to move with our colleague from Ontario, Cindy Hutnik, who has a very interesting practice and also has been very involved with government negotiations. So I thought we would finish up with her and then get Jennie and Julie involved again and sort of see how we can wrap this up, how we can give some main messages from these 4 presentations. Cindy, thank you so much for participating. I know you've been chairing the Governing Committee, Academic Medical Organization of Southwestern Ontario. You've had a lot of dealings with the government in this time of crisis as well. So thank you so much for being available for the webinar.
Oh, good afternoon, everybody, and thank you to Colin, Guillermo, and the whole COS webinar committee for the invitation. You know, listening to everybody, I think the message is starting to become very unified in that the #1 strategy personally is to optimize tax favorable loans and subsidies. I think what we're hearing from Vivian and Geoff is maybe reconsider and look at your overhead and realizing that that can grow into sort of reconsider how you're spending those money. The perspective I'm going to get is more from, first of all, a systems-based approach rather than an individual. And it's also a perspective of showing how you can get involved, because in one thing you want to borrow money and pay it back, But the other, I think, priority is to stabilize and restore our income. So basically, in Ontario, there are 17 physician-led governing organizations. We primarily represent academic medicine, but I'm very proud to show you what we've done here collectively, and I hope it'll be a template that you can all consider no matter what province you live in. So I'm going to outline some of the collective efforts that we have done relating to provincial negotiations to look at stabilizing the physician workforce. I'm going to share with you what we've learned and what we can do, and specifically what you can do. So what happened is we got together and we already had a voice to both our Ontario Medical Association and to our government. So as academic medicine physicians, we have regular interactions with them. So we put together what we called a principle document. And the first thing we wanted to do in the principle was to establish these relationships we already have and to foster them. We also, as academic physicians, decided this is the time where we come together. This is not just on advocating on behalf of academic physicians. We want to represent all physicians in the community and all specialties. We want to advocate on behalf of the frontline doctors because at the time we were anticipating a surge, but we also want to advocate on behalf of physicians who are unable to work through no fault of their own. So our initial strategy, and I'll show you how this transpired, we have what's called a Physician Services Agreement coming up, a negotiation in 2021, and that really dictates how much money the government is going to pay through our schedule of benefits to physicians. So our sole negotiating body in that negotiation will be what's something called the OMA Negotiating Task Force. So we thought initially, let's not go around them, let's work with them, because we had already established these relationships and they have been somewhat fulsome in terms of academic medicine. So we outlined a plan. I won't go into detail, but on March 18th, we began a plan. And by April 14th, we had submitted this plan to both the Ontario OMA Negotiating Task Force as well as to the government. Things to highlight here is that we did not want them to loan us anything against our future earnings, which you'll see they subsequently did. And we also wanted to align with other provincial agreements. We wanted some solidarity here. We also wanted it to be contractual, a mutual agreement by signature, contingent on the fact that every physician would be willing to be redeployed if a surge happened. So one thing we've heard through all of these negotiations is the government doesn't just like hearing about problems, they actually like us to give them solutions. So we put forward solutions, and one solution was that all doctors would have a secure base compensation of 80% of what they had earned the previous year, or that we would receive a base reimbursement at the median level across all specialties. So we would be paid during this time when we were not able to work through no fault of our own. If there were, we weren't asking for hourly rates that were in lieu of fee-for-service. We would collect our fee-for-service, but those doctors putting themselves at risk and harm's way would be given premiums, and we would backdate it to April 1st. So what happened was, we also decided to do what we call the multi-pronged approach, and this actually, believe it or not, was quite effective. We approached our OMA negotiating task force. We engaged our local OMA representatives who were unaware of some of our issues. We involved here in London our hospital medical advisory committee, our clinical chairs, our ingoing dean and outgoing dean became very engaged. We went to the president's office at Western, and on the advice of the OMA, we went around them and we contacted our local cabinet ministers. So what I learned through all of this, so in Ontario, they had a phased approach of how the physicians would be compensated during the COVID crisis. Basically, they created these virtual codes, which seem like a good idea, but in ophthalmology are not really that useful. And then there was another problem that even though they had the code, there was no way up until this month for us to actually bill for them. They then put in lieu of fee-for-service, hourly rates for the frontline individuals. We ended up not getting much of a surge, not very useful. So next slide, when we asked our OMA negotiating committee, why did you agree to phase 1 and phase 2? Because these aren't very good solutions. They said, well, it was the only way we could keep the door open for phase 3. because at the time the government said it's very hard to pay doctors for not working when there's several other sectors that are not being paid and not working. That was different than SARS. SARS particularly affected the healthcare sector. So they said we can't have the optics of paying doctors for not working. So next slide. But against all of that negotiation, the government unilaterally on April 22nd came out with this thing called an advance payment program. The OMA said, okay, we're no longer going to negotiate. We're now going to go into political action because this is unacceptable. But this is what we have now in Ontario, and I won't go into the detail, but it's a very subtle thing. It's not really a loan. A loan traditionally is, I have money, I'm going to let you use some of my money and you're going to pay it back to me. What this is I'm going to pay you in advance of work you haven't done yet. This is your money, but I'm just going to give it to you early. You then will have to repay it back to me in 5 equal installments between November and March 21st of next year. So one of the big things, next slide, that we're debating here in Ontario right now is, should I opt in or opt out? The possibility or the option of opting in is automatic. I've heard, and we have our financial people on the line, some doctors feel, well, it is my money. The sooner I get it, the sooner I can invest it. And maybe there's equities now that are a good thing to invest in. And there is even some chatter that maybe the government, when they are trying to sound like they're being very friendly, they might forgive part of it. So if it's 70% that was prepaid, maybe we only have to have docking of our future pay by 50%. Others feel that don't do anything with the government, don't owe them your money, don't owe them your service. It's only going to prolong how many months that you're working at reduced wages. And as we've all said, we're going to be working at reduced wages anyway, because our volumes are going to be restricted due to the social distancing. And some cynical people have suggested this is actually a very clever way for government. The government knows you're going to ramp up, and they know you're going to try to see as many patients as you can, and they're going to prove to you that you can do so at a reduced wage. So people are very concerned about what their long-term strategy may be. So next slide. So basically what the OMA said, we're not going to negotiate anymore, we're going to go political, but we're feeling now in Ontario that this won't really gain much traction because patients at this point aren't feeling the waitlist pressures. It's more the hospital and more the doctors themselves who will probably be feeling this. So we don't think the public at this point is going to be very sympathetic. Next slide. In terms of the SUs, this is just a quick point that has come up in our academic center. If you work in a hospital and you have a hospital paid technician or secretary or receptionist, but you're actually invoiced by the hospital as an expense, currently, even though you're paying that person, you're not eligible for the SUS program, because technically the hospital is the paymaster. They technically are regarded as the employer, even though you're paying, which happens a lot in London with several of our surgical departments. The academic medicine has actually independently engaged legal counsel who's currently reviewing tax law and legislation to see if there's a way around this. So I'll just let you know. So the bottom line is, I'm sure with the interest of time, don't give up now. It's not over. So things that you can do, next slide. Engage with your provincial organizations. In Ontario, it's the Eye Physicians and Surgeons of Ontario. They're doing fantastic work. So make sure you're reading their emails and engaging with them. Next thing you can do is actually talk to your local, ours is the Ontario Medical Association. They actually had no clue that we were suffering as much as we are. They appreciated that we made them better informed. Reach out to your member of parliaments. We got the message that cabinet didn't even know. They thought phase 1 and phase 2 were actually great solutions. They didn't know that we found them unacceptable. And the last thing is, last slide, yes. Just the last thing that just came out now, Ontario has put together a framework for planning service resumption. Next slide. Things that are a little concerning is there's going to be roles for the province, the regions, and the hospitals. Hospitals will be asked to develop individual plans. These will have to be submitted weekly to regional committees for approval, and there's going to be oversight and audits. on how the resources are being used. And finally, the last couple slides, a publication that just came out of Toronto, and I'll tell you the government is looking at this, is returning to what are called single entry team-based coordinated models, where the patient no longer belongs to you as a surgeon, they belong to a team. You may be doing the initial consultation, but another surgeon may actually be doing the surgery. So they're looking once again, next slide, at these innovative models, because from the government's point of view, it's standardization, it keeps all the doctors more of an equalizing of income, everybody almost on the path to a salary-based approach. But of course, the cons is the whole breakdown of the patient-surgeon relationship and anticipated loss of financial security.
Mm-hmm.
So last slide, I think it's the last slide. So the message I have for you is, do engage with the people who have a voice. Your local OMA people or equivalents might not know, your cabinet ministers might not know. They actually facilitated us having conversations with the Premier's office and with the Minister of Health. So thank you.
Thank you very much, Cindy. Very informative and so well organized. I mean, that's the next level. I'd like to thank you and Vivian, Mona, and Geoff as well for all the different aspects that we're seeing. I also would like to take the prerogative, because I see there's a lot of participants. Remember, you have to do the final poll in just a couple of minutes coming in to claim your credits. And I'll take the prerogative to maybe extend it if that's okay with you, Colin. Everybody seems to be very engaged and there's a lot of questions. I'd like to move back to Jennie and Julie as well to see if you have any comments, any important message based on the 4 presentations that you heard. And also another question that came in is about home office expenses. Now that we're doing so much remote care, what are the benefits of that? So I would ask you each to sort of give one key message and maybe comment on some of the questions you may have seen in the Q&A. And we can start with you, Jennie.
Sure. So I've seen a lot of questions on the chat right now about how to apply for it for CEWS and what is business number, etc. Basically, on the CRA website on canada.ca, they do have a very comprehensive details about how to apply for CEWS, how do you qualify for it, and what to do. They also have a number that you can call them in case you have any questions. So at the end of the day, I mean, thanks for sharing all the best practices from all 4 panelists. And I'm glad that I'm actually invited on this call to learn more about how everyone's actually doing in reality. Yeah. At the end of the day, if you, from the tax perspective, you're looking for what programs actually works best for you, again, I will reiterate again that speaking with your accountant and also refer to the government site would be one of the primary sources that can help you through this. And I understand that not everyone may be entitled to all the subsidies are out there, but as much as possible that can help you, you know, I would like to see that.
Okay, thank you very much, Jennie, and I would like to thank you as our speaker, Jennie Ho from Scotia Bank, for your participation. And for some final thoughts, perhaps Julie, now if you can sort of, we've gone through the 2020 hindsight, obviously that's great, and what to do in terms of 2020 foresight? What is your main message after you heard the situation from our members?
Yeah, I think actually it's interesting that there's multiple ways that that your businesses can be run. There's multiple ways that you can qualify for different measures. There's individuals, there's employees. There are a lot of questions about people that are self-employed but not incorporated. So one quick thing I'll say, and I know Jennie did say to check the government website, but the government for the federal measures typically doesn't make a distinction between being incorporated or not, so it's self-employed or not. So that's good news, I think, for a lot of people with measures. Corporate year ends, if you are incorporated, corporate year ends do change. So any tax advisors or financial advisors that you can meet with, as I sort of mentioned, all of these aspects of financial planning fit together. So there are certain things that we can plan for, and what we need in order to plan for them is knowledge about how the programs work, which we're starting to get, and then time. Once a corporate tax year ends, we can't go back. But we can plan for the future. So for 2020 foresight as soon as you have a better idea, I guess in the next couple of weeks, of when practices will start to, you'll be able to start to redo elective procedures, and then some type of income plan as to what that may look like, a better view on what the expenses were, income that was lost. As soon as you have those inputs, try to make sure that you plan as soon as possible for those.
Excellent. Well, thank you very much. Julie Petrera is one of our speakers from MD Financial Management. It seems like part of our team, we always think of our staff, our OR nurses, our technicians, but it seems like this is the time to think of our team as our extended team, the lawyers, the bookkeepers, the accountants, the financial planners. So to echo what Cindy had said, never, never, never give up. And I love this phrase from Winston Churchill. And with that, I'd like to move on to the last question. And there's a couple of questions that you have to answer. And Colleen, if you can set them up on the screen. There's a few questions just first on this webinar, and then a couple that will take you to the credits as well. If we can have that one up, please. And at this point, I'd like to remind you, there will be one more webinar in 2 weeks. We'll let you rest for a bit. Some practices, some provinces are starting to revamp. So hopefully you will join us for the last one, where we plan to wrap everything up. And the next set of questions pertain to the CPD credits. And these are just yes or no questions. Once again, as you're doing that, I'd like to remind you of the questions. I'd like to thank the presenters as well, our participants, our 4 panelists. There's this question: do you feel the financial situation is very confusing and hopeless? You feel better equipped to face personal and financial challenges? Are you motivated to pursue opportunities in this time of crisis? And I plan to expedite my retirement plans. And I think it would be good to show the results of this one, Colleen, before we move to the last set of questions. Better equipped. So that was our goal, and motivated to pursue opportunities. And I think that was the goal. And I feel better already if our team was able to do that. And this is great. And we'll move on to the last set of questions. I'd like to thank all of you for participating, for staying till the end. Remember to check the Practice Resource Center as well. And you have the website there. And these are 6 questions. You have to scroll down. And the 5th one is one that's important. The 5th one: based on what I have learned, I will make changes to my financial plans. Usually it's to our practice, right? So this one will be the financial plans. Are you thinking of doing that? And just submit that as well. I'd like to thank our sponsors, Bayer, for a non-restricted grant, as well as the whole team at the COS. And we look forward to seeing you in 2 weeks, where we want to wrap up this series of webinars, basically with what now? Optimizing our new normal. And we hope to provide kind of like a wrap up and some further looking ahead, hints on reopening and other advice. And we're really working hard on making that a very, very useful webinar. I don't know if there are any comments from the council, from any of the speakers, the panelists. Last minute things.
I was just going to say that the COS is actively working on a surgical prioritization framework that will allow us to advocate if people are feeling against the single entry methodology of ramping up. So keep your eyes out for that.
Thank you, Vivian. Yeah, and I will ask you to keep your eyes out on that, because the documents are very interesting, and there's some tools there that are really, really good in terms of helping us advocate for our patients as well. Any other comments?
Well, my comment is that what we heard from our officials that do have a voice to the Premier's offices, individual physicians do count. They don't, grouping together and having one voice is not as effective as having multiple voices. So if you feel passionately about how this is going to affect your ability to take care of your patients, writing letters and getting in touch with your local MPPs actually is effective. So I encourage you all to do so.
Okay, thank you very much. And with that, we'll conclude this webinar. And I'd like to thank you all for participating and for attending. Thank you very much. And thank you, Jennie and Julie, once again.